Today's episode is brought to you by Mazars.
SoundCartel.
From SoundCartel, I'm Nicole Goodman, and this is Business Essentials Daily. The last cash rate rise by the Reserve Bank was November 2023. Inflation today is lower than it's been for a couple of years, while consumer spending has taken a hit. So where does all this leave the current investment market? Well, Elio D'Amato will tell us there's more than just one market. Elio's our go-to investment expert and team member of Stockopedia, Australia and New Zealand. He shares his thoughts on Australian property as well as the share market in just a moment. First, Chris Ashmore asks Elio if we're in a bit of an economic funk right now and whether that's affecting investments.
Don't ask me. Ask the people selling Taylor Swift tickets. You can't buy them for love or money, to be honest, and that tells you, in general, that life is good. Markets are up. Corporate Australia is bathing in the sunshine, and irrespective of what media you're listening to and what it's trying to tell us, the cost of living pressures that we all hear about are a mirage. I don't want to sound harsh, but that's the fact of the matter. If you get upset with what I just said, folks, stop spending your money and then you'll start to see corporate Australia hurt. But for now, we're all opening our wallets and that's good for business. Thankfully, we're not seeing that doomsday scenario because whilst the cost of business is actually on an uptrend and we know that that is real, it is hurting margins because it basically costs us more to make the same amount. But we need to understand that this sort of inflation is just normal in economies. We didn't have it for a decade earlier and we forgot how to deal with this concept of prices, wages and all those sorts of things going up. Now, all of a sudden, we've been forced to reconsider it once more. So in general, I'm pretty happy. As far as I'm concerned, it's just the market behaving normally.
Well, you mentioned inflation and it's now at a 2-year low, but the RBA, the new governor, Michelle Bullock, hasn't ruled out either an increase or a decrease in the cash rate. But what do you think? Are there any signs of what may happen?
That's a good one because, to be frank, I don't matter. Look, the market does. We need to acknowledge that. And if we look at the various measures that are out there, I think what we're finding is that basically the first rate cuts are due to occur in August, if you can believe what the statisticians tell us. Now, that's here. In the US, we actually expect rate cuts sooner, although that was gazumped recently when we saw inflation expectations come in, if you can believe it, 0.1% higher than expected. For some reason, that caused the market to gazump itself and it pulled back from all-time highs. I'd like to overcomplicate it, but to be frank, it just was spooked and needed a reason to sell, and that's probably what we just saw. The question is, of course, that everyone wants to know is, will higher rates be around for a longer period of time now? I think it's fair to say that the peak inflation has occurred, that we are starting to see a moderation. What I had to laugh at that latest RBA conference, which of course, let's not forget, is a brand new approach to disclosing interest rates and how they work to the broader market. I just loved the fresh out of uni kid asking a 40-year plus experienced central banker why interest rates are actually at the level that they are. That was actually quite humorous. But nonetheless, irrespective of whether CPI is going up a little higher than expected or worse, I don't think that changes the narrative. I think 2024 will see a broader decline in interest rates. So business owners will be glad to hear that, I'm sure. And that will definitely make things far more palatable for everyone. But again, market's up. And as an old stock dog told me, think less, make more money. And that's been the case for those of us who do read the tickers because, generally in the big caps, most of those stocks go up. But of course, it's two-paced. You got your price takers and your price makers. Price makers are doing all right. Price takers, well, they haven't been doing so well.
If we can have a look at housing, how do you see it playing out this year, housing and property?
Oh, look, it'll go up. And if it doesn't go up, it eventually will. Look, if you're going to take a long-term view on the Australian economy and you're positive about it as I am, that is, unless, of course, you think it's going to resemble downtown Mogadishu anytime soon, you know that your property values are going to be fine. Of course, interest rates play a big impact on that, and we know that. But, I mean, we can just see the data, and generally across Australia, most of those property prices continue to go in a northeasterly direction, irrespective of the fact that we're working 2 or 3 jobs, and we're basically never going to pay a mortgage off until the day we die. So with all that positive news, yeah, housing's still good. And we've seen that. The building materials guys have been proving that the demand is there. Boral came out in their half-year update and basically said they can charge whatever they like and people are still buying it, irrespective of the fact that all the builders are going broke. It's a real interesting situation we get at the moment. And whilst governments are arguing on issues such as population growth, immigration, and all those sorts of things and that underlying demand, I think that will be enough to support our property market. I wouldn't be too concerned if I was sitting in my house and I looked across the street and somehow that sold for, say, $50,000 less than I thought. I'm not going to run in and tell my wife that it's time to sell because of that. Unlike the share market, where I might very well do that. When it comes to property, if I'm in a place that I'm happy with, I'll stay there till I die, which is fortunately the case it is right here. But nonetheless, yeah, still optimistic because I'm long the Australian economy. If you believe in the economy, our property prices should be fine.
Looking at the share market, how's that going?
Yeah, great. Look, it just reflects the broader market. At the moment, the big end of town is doing quite well, and good for them too, because good for them is good for our market, of course. That is here in Australia. In the US, we've cracked the 5,000 mark in the broader S&P 500 index for the very first time in our history. It has pulled back a little bit since then, but you can't unwrite what history says. It's just zigging and zagging, which of course is a technical term for what the market does. It goes up and down as it goes, hopefully, in a general trajectory in a northeasterly direction. So notwithstanding, again, what you might read in the media, corporate Australia and the global corporate community is telling us something different. It continues to remain a good period for businesses to invest in themselves because that underlying demand for their services is there if they crack that magic egg and they're actually able to identify what it is the consumer wants.
If we look at some industries in particular, any that are doing extremely well and others that aren't doing so well?
Yeah, what a brilliant question. I'm actually going to take a different tact on this because we're not talking industries per se. I like to think at the moment our market is two-speed somewhat because of that price maker, price taker definition. I talked about the price makers. So, stocks in IT, services, engineering, building materials, even financials, they're doing okay. Then you look at price takers, stocks in the commodity space, with the exception of gold and uranium, they're having a bit of a challenging time. Energy as well. That's probably where I should have said uranium. They've also had a challenging time as the barrel of oil has been fluctuating a little bit. So a lot of those have been quite challenged. Unfortunately, their cost of doing their business has been going up, but they've been unable to pass the increase in cost to their clients because they've got to take whatever the market is giving them as a price. So I urge investors to have a look at what it is that drives the prices that their companies that they invest in actually do set. Because what I think you'll find, particularly over this reporting season that we've just begun, that you'll find that those companies that have a stronger element of control over the prices they set will do better than the latter. It feels a bit like being a seagull at a footy match after the game is done, trying to, eat up those last few chips to get that little bit of 20%. The harsh reality is that when markets are at all-time highs, it's probably not the time to be looking at the market. The time you should be looking at it is when it's really in the doldrums, when it's been hit very hard. And no matter how much I get excited, how I try to tell investors over the last 20 years that they need to be doing this sort of stuff, unfortunately, I've not been able to convince them. I haven't been able to crack that chestnut yet. So I'm just running with the bulls. I'm happy the market's at the levels that it is, and I sincerely hope that it continues because it's good for my portfolio and it's also good for business, I found.
Absolutely. Well, before we go, Elio, what are your stocks to watch?
Yeah, look, it's a tough time to declare that because we are in that nuanced period of interest rates and the earnings season is just upon us. So take all of this with a grain of salt. We have had some quarterly updates from our miners, including one in particular like a Linus, the rare earths metal producer. Whilst, of course, battery metals have been on the nose, the rare earths are not actually just a battery metal. And irrespective of the fact that China basically controls that entire market, I see Linus as being number 2. So the fact that its price has pulled back 50%, if you believe that the cycle will eventually turn, means that it's a stock to have a look at. But I mean, if I'm still going to focus on those price makers, big or small cap stocks, you've got Data3, who wants to become the next technology one. You've got Lindsay Australia, the freight group that basically have the only cold storage freight transporter in Australia. So they're basically it. We've got the plumbing group, GWA. We've got AGL, which has turned around from a massive loss with some huge write-downs to a very big profit this time around in our view. Telstra is the cornerstone of many portfolios, and it's very different than what it was in the old Wild West days. Even Ansell, again, if you believe in that cyclical nature, they should get rid of that inventory that's been holding them back, and they should also do quite well. And then you got Super Retail, who's nice and diversified in that retail space, so they've been able to command that share of wallet. Irrespective of how people want to roll, they've been able to flatten that out and still grow those earnings. And then you got stocks like Monash IVF, where you can basically write your own ticket, and they've been doing quite well as well. So that's where I'm really looking at the moment. Price takers, it's a bit harder. You got, African gold miner Resolute, which I'm a fan of. You got Karoon Energy, which is expanding into the US. You got Mount Gibson, who's got all this cash and needs to do something with it. And then you got Rice Growers, for those who know the Sunrise brand. They're a company related to that. And boring, but again, quite staid, and they're able to control things in an environment where they can't set the price. But definitely my underlying preference is the price makers. If all of that's too daunting, maybe get into VAS, which is the Vanguard ASX 300 ETF. Wide diversified exposure. Dirt cheap. You don't even have to think. You can immediately just get into it just with one investment. That's listed on the market, and that's a very easy investment for everyone to consider.
That was Elio D'Amato, investment expert at Stockopedia, Australia and New Zealand. This episode of Business Essentials Daily is produced by the team at SoundCartel. Thanks for listening. I'm Nicole Goodman. We'll bring you more Be Daily tomorrow. Follow at BE Daily Podcast across social media and head to bedaily.com.au for more from the Business Essentials Daily podcast. SoundCartel. This episode was brought to you by Mazars. To find out more, visit mazars.com.au. That's mazars.com.au.